thing. Like we also share stuff news wise, like before news is out there, so you can make timely moves. And like,
we did that.
going
This,
back
yeah,
to
here it is.
something like this is something that we're seeing happen.
Yeah,
This is like potentially
almost
something.
live. This is
I don't
basically
know.
a
What do you think about
reliable.
this situation?
I would say this is like a reliable rumor. And what we're looking at here, and the reason we've
Yeah.
shared it also, you can see on the Discord, it's being shared in our news and info hub. So this is a place where we share relevant like developments in either the stock or the crypto space, stuff that we are
Right.
interested in and that we know our members are participating in. If there's something that comes across our desk, we will push it forward here. And so this is an
Yeah.
example of that, where basically this is a due diligence that's been posted by a relatively reliable source on Twitter, who is looking at the exodus of USDT, which is the Tether stablecoin, from the Huobi exchange and from the Binance exchange over the last several days, and then is kind of drawing connections between the Huobi exchanges on the blockchain, on the known wallets that are owned by the Huobi exchange. We're looking at the reserve of crypto that they hold, comparing that to what they owe to their clients, and he's basically pointing at some pretty massive holes, where it looks like, with on-chain data available here, that the Huobi exchange only has about a quarter of the actual assets to back the debts that they hold on behalf of their customers. And tokens that have been introduced through the Huobi exchange, such as ST-USDT, which is a staked tether, which is a asset that was launched by the exchange. And the way that they bill it is that you deposit your USDT, and in exchange you get ST-USDT. And the selling point is that the USDT you deposit gets turned into actual cash, and then the actual cash is used to purchase bonds, like U.S. Treasury bonds. I believe 9-month bonds or maybe 12-month bonds, but it's about a 4.56% APY on those bonds. And so that this ST-USDT should then earn, 4.56%. And this due diligence is showing that the USDT that is on-chain deposited into those staking contracts is not actually being redeemed for cash. And so it's hard to to draw a line at like this is actually backed by cash, and it looks like there's quite a bit of foul play going on. This is very similar to what happened at the FTX before the big FTX like Sam Bankman-Fried like collapse there, and honestly at the time the SBF stuff happened, we also shared this type of stuff within our Discord. And I believe it was 2 days before they halted withdrawals, we shared the rumors of insolvency. And we, not just the rumors, but we also shared the advice, get your money off of this platform before it's too late. And people did get their money out literally in the nick of time. And so this is a similar example of that. We're sharing this now. And the advice that comes with it is get your money off of Huobi and de-risk or de-expose yourself to the USDT stablecoin. Since the Tether stablecoin is potentially, going to need to be massively sold in order to make up for this insolvency. And these institutions like Huobi and Justin Sun is the owner, heavy involved.
He also owns Poloniex. He also
Tron chain.
He basically made a lot of money with the Tron coin. If you guys were around back in
TRX.
2017, TRX.
Yeah.
So he's a lot of let's say Fugazi.
Yeah, he's a well-known kind of like, not directly a scammer, but he's a very well-known figure in crypto, and he's always kind of like scam adjacent. So personally, while I'm not going to stand here and try to like besmirch him and say he's a scammer directly, I would say that he's around when scams happen, in a way that's a little suspicious. Maybe it's not foul play. It's obviously he's around in crypto in general. So there's a lot of scams. It doesn't necessarily mean he's there, but I am cautious, and we are urging caution with this.
Yeah, I think for us, like, is like what we do for our members is that basically like, try to help them, and one part is a huge part is like risk management.
Yeah.
And like we were talking about trading and stuff, so like So same thing when FTX went down. Like who knows? This could still be just a rumor. They might be fine.
Yeah.
We don't have actual. Uh, we can't pull their financial document out.
But right
like,
now, you can pull your
But
money
right
off the
now-
exchange.
Yeah, exactly. So
So-
right now, what you can do is like you can still take your money out.
Yeah.
Be safe.
There is not
And-
a DPEG. The value hasn't
Better
lost.
safe than sorry.
Exactly.
As they say, you know.
Exactly.
And that's
It's your
all.
money at the end of the day. Risk management, like I said earlier, is a big part of this equation. And so even some of our members who, when we brought this news up, quite a few of our members, again, Huobi is an exchange based in the East. Most of our members are here in the United States
Yeah.
or in the West and are not necessarily using Huobi. And so
Yeah, I
they-
personally am not.
I don't-
I never have.
Exactly. I don't either. But here's the kicker. We need to understand the interconnectivity of the nature of decentralized finance. And so if Huobi does, prove to be insolvent and they do have this massive, run on the remaining assets and they need to sell all this tether basically to get back some cash, if there is a liquidity crunch on the USDT token, this tether coin, the stable coin, that coin is deeply, deeply rooted, like very intricately woven into the decentralized finance system.
Right.
It represents a major
It'll affect the whole market. Yeah.
It represents a major portion of the stablecoin liquidity in general. A big part of the Curve pool, the 3 CRV pool, that's the main stablecoin pool in DeFi, is USDT. It's a big aspect of money market protocols like Compound, like AAVE. So even if you're not directly using Huobi, you might hold assets that use protocols that are tied into this USDT asset. So like, for example, if you hold, let's say you hold Origin USD, so that's OUSD, that's like a stable coin that it generates revenue while you hold it. Or also USD Plus, it's another example of a similar thing. USD Plus is issued by Overnight Finance, and Origin USD is Origin Protocol, which I believe that's a company that's at least co-owned by the co-founder of PayPal. So yeah, it's a big one. But the way that it makes revenue is by supplying stablecoin liquidity to Curve, and again, Curve is heavily exposed to USDT. So you might think, like USDT and Huobi and all this stuff is not stuff I use. I hold OUSD or I hold USD Plus. USD Plus uses Overnight Finance to manage their positions, and most of a good portion of their money is in the AAVE money market, which again, if the collateral that is lent out against USDT from this money market and the USDT becomes, insolvent and loses its peg value to $1, then that collateral backing, loses its value and the debt becomes bad, and that affects the other assets in the money market. So all of this interconnectivity, is not necessarily something people are aware of on the surface, but is also something we like to help people understand when it's like, hey, here's what the news is, but here's the wider reaching implication of this news to the rest of this crypto market.